As an Amazon seller, you face unfortunate situations where Amazon is losing or damaging your inventory, or Amazon staff is entering incorrect product dimensions into the system. This and many other cases are causing you to lose a lot of money as a seller. But there is a way to claim compensation for such cases from Amazon. It's called Amazon reimbursements. And in this video, you will learn how you can claim the money and how to do it in an easy way. Our guests today are seller investigators, and you will also find the link below to their service in the description of this video.
Hi Lee, I'm really happy to welcome you on OrangeClick YouTube channel today to talk about Amazon reimbursements, and you will explain a little bit about how Amazon should work with those and get some money from Amazon. But before we go into the details, could you first introduce yourself? And also let us know a little bit about the seller investigator solution you offered for Amazon sellers.
Sure. Hey, so you had it right. It's Lee Lurie, and I've been a serial entrepreneur for probably 25 years. And my partner and I, we actually have 3 partners, one in the Philippines who runs our technical team, my partner Robert, who lives outside New York City, and myself, who live in Atlanta, Georgia. The 3 of us started this business maybe 7 years ago, and we were acquired by Carbon6, hence the colors, about a year ago, actually a year ago last week, which was really an amazing opportunity for our business and for Carbon6. You know, it's been an amazing ride. This business, this Amazon space is, you know, minting successful people. And it's fun to be around an industry full of young people that are, you know, kind of getting after it and being entrepreneurial. And that is absolutely thematic across people who were on the platform. And it's been a lot of fun.
Okay. Yeah, one question before we go into the slides. I know you prepared something for us as well to go through some of the main points. I wanted to ask, back in the day, how much did you hear sellers talking about Amazon reimbursements? And do you hear people talking about it now more often?
Yeah, it's definitely gotten more mainstream. There's no question about that. When we first started, both my partner and I were sellers on the platform in previous lives, and him longer than I was. And he came to me and said, "Hey, you know, I got this company that's approached me. They've been hounding me for 3 or 4 times. Finally, I'm gonna let them run an audit for my store." And he had about a $2 million a year store. And they found like $18,000 that just sort of fell out of the sky. And he was like, "Oh my God, I can't believe how amazing this is. We need to try and build this business. Like, I think we can do this, and I think we can do a better job. And, you know, I know the people to build it, and let's do it." And that was sort of the genesis of the business. At first, certainly it's sort of feels a little bit like selling ice in the desert, in that everybody needs it. And it's a great service that, whether you work with us or a competitor, you know, I think we're better, and I can give examples of that if people want to hear it. But at the end of the day, like, this is something that if you have an Amazon business and there's any complexity in it, I mean, if you sell one product out of your garage, you know, you may be able to keep track of it if it's, you know, a really simple business. But the majority of Amazon businesses are not that simple. And while you think you may be able to get back some of the money owed to you, we have set our business up such that if you let us do it, you should make more money and not have to deal with it and let us do it than if you do it yourself. And we have nearly 4,000 clients on our platform at this point, and that just plays out. I mean, 30 times a day, we have clients signing up with that same kind of process, that this is cumbersome. You should be looking forward in your business. You should be thinking about how to drive more sales into your business, find new products, be doing things that are proactive to grow your business. What we do is clean up the trash, or, you know, clean up the mess that was created. We can look back 9 or 18 months, depending on the case, and then we monitor on a go-forward basis. But, you know, basically, we help make your business more efficient. We don't make your business run better. So we try to encourage people to focus on growing their business rather than doing the stuff in the past. Let us deal with that, and then you move forward. And that has played out very well. And, you know, we've got a lot of very happy customers that, you know, we're finding significant money for.
Plus, Amazon sellers do have a lot of things on their table and plate anyways. So sounds like a good solution for them. But yeah, let's dive into the exact details of Amazon reimbursements. Go ahead, share your screen, and
Sure.
let's see how you can educate us about this topic.
Okay, so here we are, understanding Amazon reimbursements. Again, I highlighted this a minute ago, that it's really important in your business to be thinking about the future in your business rather than the past. And so what we want to do is help you, run your business so that you can go on and be more successful in the future rather than dealing with the stuff of the past. So Amazon, this is a universal problem on the platform. 99% of sellers and vendors, if you're 1P, we have a solution for that as well. Although today we're focusing on 3P. Basically what happens, you can see here the list of things, and I don't necessarily need to read through it, but it starts where Amazon loses inventory in the warehouse. It gets damaged in the warehouse, gets run over by a forklift. For whatever reason, it can't be sold. Missing inbound is where they miscount it when it comes into the warehouse. This is the first place there's leakage, and this happens to almost everyone. Basically, Amazon, because human error, if inventory would be a problem, they weigh and measure the external box that you ship in, and they assess what is in it based on what they have as your weight and dimension of your particular sin. And so if that is off by any amount, Amazon is going to miscount your inventory over and over and over again. So we try to educate people as part of our process to help alleviate some of that. The problem is all of these things happen behind Amazon, wrong word, but once it hits their warehouse, you can't control it, right? It's systems. Do they miscount it? Do they lose it? Do they run over it? Do people steal it? Whatever whatever happens that we end up fixing, it's not normally something that you as a seller or a vendor can control, which is a little frustrating, but it's just part of it. If you were selling into a traditional retailer, there'd be what's called shrinkage, and that would normally be a 2% allotment. We typically find on the 3P side about 1% of net sales that is that's messed up, or Amazon is misaccounted for. So another example would be abandoned cases. This is something that we do that nobody else in the industry does, is customer returns. This is where Amazon is very customer focused. So if a customer, let's say you're selling glassware, like glass could break, you sell a 4-pack, a customer receives it, something was broken, Amazon immediately sends them a replacement unit. But when they do that, they have 30 days to send back the original shipment, which they don't do means you're out 2 pieces of inventory and should have accounted for that, whether it be because UPS broke it in transit, or FedEx broke it in transit, or DHL if you're in Europe, or whether it was a problem leaving the warehouse, it was broke, or if it was done in packing. But any number of those things, it should not be costing you that money as the seller. I mentioned the weights and dimensions. That gets back to the abandoned cases and the missing inventory or missing inbound inventory. Shortages, inventory and pricing, pretty straightforward. Amazon just not paying you appropriately. Chargebacks and accruals, that's going to be more on the 1P side. But, these are examples. This is a little bit cross-pollinated between 1 and 3P. But on the 3P side, the chargebacks and accruals would be that there are just lots of points of leakage that happen across your system. And as good as you think you run your business, I promise you we can find money. It is a virtual guarantee that there is money out there that you are missing. So now again, this is going to be 1P, where you got chargebacks, fines, shrink, deductions. What does that all mean? I mentioned that, at a traditional retailer, you'd have 2% net terms. And what that means, if Amazon has they owe you $10,000 and there's 2% allotment, they would leave $200 off that payment. Amazon doesn't do that, but at the same time, they're not perfect. I don't think they're a bad business. I just think that if they were perfect, that wouldn't really be practical at the speed at which they're getting product. I mean, they're trying to get product to you in 2 hours. Just the complexity of that supply chain is really difficult. But what this creates now, it is here, it's an opportunity to get money back. I mean, it's an opportunity for Amazon to make mistakes, but it creates an opportunity for you to claw back that money. And, using a service like Seller Investigators or ChargeGuard, which is our sister company, on the 1P side is an example of how how you fix your Amazon business. There are very few instances that you can do running a business on Amazon where you can materially move the needle. Most businesses in this space, whether it be 1 or 3P, would be very happy to be running 20% margins net. And if we find 1% of sales, that's like finding 5 points of EBITDA, which is like, you just can't find that in any other instance. This is the lowest hanging fruit for making your business more efficient. So how do we get it back? Number one, you can handle it yourself. I mentioned some people do, and we certainly see that. But what we typically see is they get about 40 to 50 cents back on the dollar that they're eligible to get back if they were better at it. Either Amazon, makes you jump through enough hoops that you get discouraged, or whether or not you're non-compliant in the way that you submit the tickets because you're not aware of the rules that Amazon has, and there are some very specific rules which can get you into some compliance issues if you do it internally. But more than likely what happens is it's handed to somebody who has multiple hats within a relatively small business, because most of these Amazon businesses, let's be honest, are small businesses. And so somebody who's doing 5 other things is charged with getting these refunds back. They send an email out, they track it, you have a VA, they're doing it along with 50 other things you ask them to do. They don't do a bad job, but they go after the lowest hanging fruit, like the missing inbound shipments, and they get back some percentage of them. With us doing this all day, every day, we submit about 20 to 25,000 tickets a week to Amazon. And you can just imagine the expertise that's built up with doing it that frequently compared to if you're in your own business and you have a VA or, an individual within your business is maybe not a VA, but that person is going to have lots of other things they're doing, and they might dedicate 20, 30, 40 minutes a week to it. I mean, we're dedicating 150 people full-time, 6 days a week at this problem. You can just imagine we're going to be better at it. And we've priced it in such a way that it should yield you more money net after our fees. And our fees, the way they're priced, is we get paid according to dollars that you physically get back. So unless you've gotten back all of your money, we're not getting paid. So, if you get back $10,000, we get paid a percentage of that $10,000. And if we're not successful getting that 10 grand back, you owe us literally nothing. There's a free audit. There's a free engagement on the platform. You can look under the hood. You can see what's going on. It's only if you want us filing cases that it ends up, costing you money when we're successful. So back to handling it yourself. Obviously, you have visibility into what's going on, but normally, you've got lack of expertise, which I mentioned, lots of paperwork, compliance, all the things that we've kind of talked about. Option 2 is using us. I mentioned that we're transparent. We have a dedicated team. Oh, by the way, this is important. We are a verified software partner. If anybody's concerned about that, we are audited twice a year by Amazon. We are a preferred vendor. You can look us up. You can see it out there. And because I mentioned earlier about the returns and some of the other things that we do, because we're willing to go down to very small cases and collect money, it's not profitable for us any more so than it is for anybody else. But we think it's appropriate if you entrust us with your store, that we think it's important to go after all the money, not just the easy money that makes us, make easy money. So the blend of it is we end up typically, 20% more than our partners. And we do it in a transparent way. This is the software partner. You'll compare. This indicates that we are a software partner. How does Seller Investigators work? You sign up free. We review the inventory. It typically takes us 24 hours to sort of go through it. Assuming you move forward, you give us a credit card. That's how we charge you. 100% of all dollars that come back into your account goes straight into the bank account that is attached to your Seller Central account. And then you get paid. And then twice a month on the 1st and the 15th, roughly, we hold that credit card on file and we run it for what our agreed upon percentage is. Our percentage is 25% of what we are successful getting back. And then that number can go down with scale. So if you're over 5 million, and you want to have a conversation with us, I would welcome an email. My email is lee@sellerinvestigators with an S at the end, lee@sellerinvestigators.com. I'm one of the partners. If you email me after you've run an audit and we see that you're more than $5 million, I'd be happy to find room to negotiate with you. So here we are. Here is sort of a use case, just to kind of give you a sense for dollars and actual sort of hard money here. It doesn't really matter the category. It's very much agnostic to category. This is a universal problem. They're doing about 14 million in sales. We found 164 million in reimbursements. And this was after a current provider had been going in it. Now, this is an extreme case, but this just indicates to you just how it is not the same. Some people say, and not to sort of be stereotypical, like Chinese food. Chinese food costs the same no matter where you get it at the restaurant. Therefore, everybody's must basically be the same. That's clearly not the case. Food varies widely. Ours is the same thing. All refund people are not equal. We are better at this than other competitors. It is obvious when you see audits like this. You see the missing inbound, you see the lost and damaged, $35,000 had expired, almost $40,000 had been abandoned. They just couldn't deal with it. They didn't know how to get through it. It was either expensive to do or got rejected or whatever. But that's unacceptable. That's $40,000 your business has lost. And I can't imagine having $40,000 roll off that was abandoned to a customer. I would be mortified. But you can see the middle column here. We've gotten them back $164,000. And you can see sort of the breakdown on the right-hand side. But we've identified a lot of money, and the exact numbers are somewhat relevant. But it's more, it speaks to sort of how we do the business versus competitors, that you can do an audit. Even if you work with another competitor, even if you do it yourself, I don't care, run an audit. It is smart for you to do. If we don't find you money, then your other company's doing a great job, or your internal systems are doing a great job. That's unlikely to be the case, but I understand it. But if you don't like what we offer, just don't move forward. There's no cost. It doesn't affect you. It's not like a credit score where Amazon's going to ding you because you have us run an audit. There is no risk. There is no obligation. Here's just another example. We don't need to go through all of the details here again, but again, another $12 million store. We found $198,000 that, people had missed. And this was mostly in missing inbound, which is kind of sad, quite honestly, because the missing inbound should theoretically be the easiest thing to do. The rest of it's messy, but this typically is coming in big chunks. So it just tells you that it's just poorly done. They're just not doing the work that they say they're doing. And we see this. I mean, we see this certainly weekly, maybe not to the extent where we're talking $200,000, but on a store this big, we find tens of thousands of dollars weekly for customers. Here we are. You got inbound shipments, lost items, damaged items, customer returns, overages. These are the buckets where we find money. And you can look and see, by the way, you can take this QR code, you can see all of this. That'll take you to our landing page. I'll stay here for a minute in case anybody wants to see the landing page off the QR code or the Pixelme. But these are where your business has shrinkage and loss. And if you think you're doing some of it, you need to be doing all of it, or you're losing out, substantially. Again, thematically speaking, Amazon is, I don't know that they're maliciously keeping it. I'd like to think they're not, and I don't think they are. But if they're keeping 1% of your net sales, that's 5 points of your EBITDA. When they are raising costs to be on the platform as consistently as they are, which is, the cost of labor has gone up, the cost of systems is constantly going up, all of that. This is a way to offset some of those, added expenses, is make your business more efficient. Even if it means you're not winning better, you're at least not losing as bad. And, sometimes that's a win in itself. You've got 3P or Seller Central, you've got 1P or Vendor Central, and you've got hybrids. people, with a foot in both camps, selling in both platforms. And we have an offering for all three of those scenarios. So if you are on the Amazon platform, I don't care how you're on it, you should be running an audit. It is free within the Carbon6 ecosystem. And I'd say foolish, but you're foolish not to have eyes on your business. And if it's not us, you should look at a competitor. I'd recommend shopping it, whether you're with us now and want to shop it with another competitor. I absolutely recommend it. It doesn't hurt you to shop. And that's where we are. So that's my story, and I'm sticking to it.
Perfect. Thank you so much for such a good overview, and also for providing those case studies, because I think it's good for sellers to see in which categories sometimes sellers are able to get some money back, and like what are the amounts overall. And actually, one of my first questions for you would be, in the beginning of the video, I asked, like, do people talk more about Amazon reimbursements now than before? But the thing is, maybe you and me, we know about it, and people who go to events know about it, and also people who watch videos like we do here. But there are so many sellers who actually don't know anything about it. So my question is, like, how sellers usually even find out, if they don't know it from YouTube, that Amazon owns them some money? Because it's not that they get like some kind of notification on Seller Central, hey, Amazon is owning you some money.
Oh, you're absolutely right. I mean, there are a lot of sellers out there. And while we think our messaging is everywhere, right? I mean, you're doing these podcasts, doing these conversations, posting to YouTube, posting on, social, going to conferences. And there is a community for sure that is very aware of this. And as you get more sophisticated in your business, you're more likely to be aware of it just because of the exposure. But if you're a new seller, or you're a seller that's just sort of good at what you do and you don't go to conferences and you don't pay attention to it, for sure, it's easy to see it. That, it's easy to not know that this is a thing. What's amazing to me is the number of stores that we audit. So we onboard somewhere in the neighborhood of 25 to 30 people a day, about. The number of stores that have never had somebody in there auditing, it's certainly not all of them, let's be clear. Like, 10 of them probably have somebody that's been in there. 10 of them probably they've been doing it internally, and 10 of them have literally never done it. It's just baffling to me that at this stage, for as long as we've been doing this, that still continues to be a theme. But it's great because it means that we're really helping people out. And that feels good to be, building a business that is really benefiting people in a meaningful way. I mean, we are getting a lot of money back for most sellers, and at their own scale, it's meaningful. Whether you're doing $50,000 a year on Amazon, or $50,000 a year on Amazon, or whether you're getting back roughly the same proportion of money, which is about 1%. As you get to be really big, it tends to get a little compressed, just because you typically have more systems in place and you might be at 80 basis points. And if you're kind of in that middle, around 500 to 800,000, where you're kind of growing, but you probably have a lot of issues because you're scaling and you're struggling, you might be at 1.5%. But typically about 1% is a pretty fair number. And, you can easily figure out what your top line revenue is and about what you're owed back. And it's a lot of money. I mean, we find people, it's just crazy how much money we find on a regular basis.
Okay. And out of all of those different kinds of areas where Amazon could be owning money to seller, what do you think, what is like the most difficult one for sellers to manage on their own and get money back? Is it maybe some inventory issues, or as you mentioned, something about customer returns, like where it's usually quite difficult? Either Amazon asks for a lot of documents, or like very detailed cases or something like this.
Yeah. So I would actually flip it, the question, if you don't mind. And I would say the easiest part is getting when they miscounted on missing inbound. Like, that's the easiest. It typically has the most bang for your buck. You get back the most amount of money because they lose 50 pieces in a shipment, and and they're $10 a piece, so it's immediately $500. That's easy. The harder one is where you have to reconcile by way of looking at, let's say, 3 or 4 sales reports, which is how we ingest that data. That's the sales data we ingest. which we then spin against each other, and we look for anomalies within the records, which indicate that there are probably some problems. It's much more difficult to identify that. You almost have to go line by line in a spreadsheet with no real way of cross-linking them. And so that's where it gets complicated, especially if your business has any real volume. You're selling 3,000, 5,000, 10,000 pieces a month. You're trying to reconcile individual cases, one-offs, two-offs, three-offs that happen in the warehouse, in 6 different warehouses across the country. And the complexity of that grows exponentially very quickly unless you have it systematized. And the reason that it's not so bad for us is we've written all this proprietary software where we smash those reports together in an algorithm, which then outputs something that gives our case manager, let's just say it was 10,000 cases. It compresses that down to, say, 50. And then that person eyeballs what looks appropriate and what doesn't. And then that's sort of the subjective nature of it. And then we have to file the cases peer-to-peer on Amazon, because I mentioned in the beginning of this, that you got to be careful about compliance. If you're not careful, you can do things that Amazon gets upset with. And one of those is, for example, submitting tickets by way of bots, or doing it with ChatGPT, or doing things like that. Like, it needs to be done peer-to-peer. Our customer service rep or your person at your company needs to physically send that communication to Amazon and have a back and forth. And they do that so that there aren't fraudulent tickets submitted, and it doesn't waste their time that, you're submitting tickets that, shouldn't be done.
Okay, very good insights. Yeah, thank you so much, Lee, for all of this information you shared with us about Amazon reimbursements. And to wrap up, could you once more explain or highlight anything about the Seller Investigators tool that you would like to? And also let us know where could sellers find more information, and also sign up for that free audit you mentioned a couple of times during the video.
Yeah, so you can go to sellerinvestigators.com and sign up. It's pretty obvious how to sign up. If you have problems, we have onboarding specialists that'll help you kind of walk through it. There is a multi-step process to getting on the platform. Amazon does that to keep nefarious people or bad people from getting access into your Seller Central or Vendor Central account. And so we're going to basically accept you as a developer. Then, there's a back and forth. And again, we have people to walk you through it. The whole sign up shouldn't take 5 minutes, 10 minutes tops. So it's pretty simple. We have tutorials that kind of walk you through if you have questions. We try really hard to be very transparent about the way this business works. We have a dashboard that indicates where we've been successful, where we haven't, where we need documentation from you, where things have been good, where they've been bad. We try very hard to make it where we're doing this, rowing the boat in the same direction. We want you to know that we're humbled that you will give us an opportunity to help you in your store. And we take that very seriously. And we work super hard to make that relationship be a good one for the seller, not for our business. Obviously, it is about our business too. This is a capitalistic business. But we do it in a way that is intended to be a good deal for the seller or the vendor that we are working with. And if we can't win your business, I can't stress this enough. If I don't win your business, work with somebody. If you don't, you are giving Amazon money. Like, work with us or don't. I'd love it if you did. But if you don't work with us, go work with somebody. Is probably the best theme thing that I can tell someone. Because if you don't, you're missing out, and you shouldn't be missing out because it's your money.
What a great way to sum up this whole interview, I think. And yeah, I will include all of the most important links to the video description as well. So if you want to check it out, you can do it through that as well. So thanks again, Lee, for coming here. And if anybody has any questions about Amazon reimbursements after watching this video, you can leave them as a comment to the video, so we could invite Lee or somebody from Seller Investigators back to the video and answer those questions as well. So yeah, thanks again. I hope to see you soon, and I wish you all the best discovering all of the money Amazon owes to the sellers.
Thank you so much. I appreciate being here. And last note, if you have any problems, you can always email me. I'm one of the founders, and the buck stops at my desk, Lee@sellerinvestigators.com. Any day. Thanks very much.
I hope this video was helpful, and if you want help by seller investigators to claim money back from Amazon, which they owe you as an Amazon seller, you'll find the link below in the description. And if you have additional questions, use the comments section below this video. And if you like the video and our channel, don't forget to click like below the video and subscribe to our channel. And now I would like to invite you to watch other video which will help you to understand how you can better plan the product demand on Amazon.